Hello, this is Finoptio. Today, we will learn about cash flow, one of the components of wealth. Why do you think you should learn in detail about cash flow? We believe that a poor understanding of cash flow can have fatal consequences. That is why we want you to have a high level of understanding of cash flow. First of all, I would like to ask you what you think about the important issues related to cash flow. Many people vaguely know that cash flow is important. That is why I will ask you detailed and specific questions. Are you investing in dividend stocks, covered call ETFs, or real estate for rental purposes to increase your cash flow, or are you considering doing so? Next question. Most people know that they need to limit their spending to increase their excess cash flow. So, do you know about effective ways to reduce your spending? Are you limiting your spending to ensure that you have enough excess cash flow? Next question. Are you giving up on securing cash flow? Do you agree with the idea of investing in growth stocks, real estate, or cryptocurrency even if you have to give up cash flow now in order to reap huge investment returns in the future? Many people do not have the right answers to these three questions. Firstly, many people buy dividend stocks, covered call ETFs and rental properties because they think cash flow is important. However, this is often a strategy that fails in the long run. In addition, many people do not know how to effectively reduce their consumption. Most people simply decide to spend less. They force themselves to set a limit on how much they will spend per month. However, they soon give up on their savings because they find it difficult to live a frugal life. This is similar to the fact that everyone knows that you should eat less to lose weight, but very few people succeed in doing so. Not many people succeed in saving money and accumulating great wealth in the long run. This is because they do not know how to solve the fundamental problem. Also, many people give up on securing cash flow for various reasons. First of all, it is very difficult to secure cash flow. And some people think that it is better to give up on securing cash flow right now and invest in growth stocks, real estate, and cryptocurrency, which will not generate cash flow but will give you the opportunity to greatly expand your net worth. But giving up securing cash flow is the same as giving up wealth. Wealth, as we define it, is the state of consistently getting what you want, when you want it. Cash flow is essential to achieve this wealth. Let's review common misconceptions about cash flow and the mistakes that result from these misconceptions one by one to improve our understanding of cash flow. By improving one's understanding of cash flow, one can avoid the fatal mistakes that many people make, and begin to see the many paths to wealth. Once you have secured your cash flow, you no longer have to sell your time to your employer to make money. Your time will be used in a more beneficial way. Securing cash flow eliminates the need to sell assets to spend. Wealth will continue as you can maintain a large amount of assets for future wealth for a long time. Securing cash flow will enable you to maintain a stable leverage structure for a long time, which is one of the essential elements of wealth. The wealth will grow more and more. If you don't agree that leverage is an essential element of wealth, please watch the previous video again using the button in the upper right corner. Before examining three misconceptions and mistakes about cash flow, let's define the concept of cash flow clearly. We define cash flow as the amount of cash inflow that is regular and stable compared to other means of generating profit, excluding consumption. For example, I would not consider stock trading as an act of increasing cash flow. This is because the cash inflow is not regular and stable compared to various means of generating revenue. I don't think real estate rental income is a good investment, but it is an investment that increases cash flow. Although there is a risk of vacancy, compared to other means of generating profit, renting out real estate can be seen as a way to generate regular and stable cash inflows. Now, let's take a look at the misconceptions about cash flow. The biggest mistake people make when it comes to cash flow is choosing a means of generating income that results in excessive taxation. Governments in most countries impose high tax rates on regular income for their citizens. The chart shows the highest dividend tax rates in each country. If you look at the chart, you will see that many countries, including South Korea, the UK, Canada, and France, have a top tax rate of 30% or higher. Many people do not fully understand the negative implications of this tax rate when investing. The high tax rate on investment has a much more negative meaning than simply the government taking a portion of the money earned. Rather, if the tax rate for an investment is high, it is correct to think that the investment will not be profitable. Let me give you an example. If we invest in United States Treasury bonds, the yield is 4% to 5%, but if we invest in bonds rated BB or lower, the yield is 7% to 8%. Why is there a difference? For your information, BB-rated bonds are bonds that have been deemed unfit for investment by credit rating agencies and are bonds that are at high risk of being unable to pay interest. In this example, the difference between the yield on United States Treasury bonds and the yield on BB-rated bonds is 3 percentage points. The reason for the difference is the difference in risk. We call this difference the risk premium. Anyone who invests in United States Treasury bonds will receive interest payments as long as the great nation, the United States, does not collapse. It is virtually risk-free. On the other hand, those who invest in bonds with a BB rating or lower will be very anxious because there is a possibility that they will not be paid the interest. Naturally, no one would invest in a BB rated or lower bond if there was no compensation. Therefore, for those who invest in BB rated or lower bonds, a 3% risk premium is added to compensate for the risk of non-payment of interest. This will now provide some peace of mind to those who have invested in bonds rated BB or lower. This is because, although there is a possibility that interest will not be paid, if it is paid, it will be paid in large amounts. In the short term, the performance of these two people may differ, but in the long term, their performance will be similar. Does this explanation make sense to you? Do you remember this picture? If you don't, please click the button on the top right to watch the video explaining risk, expected return, and perfect competition market again. If the market is quite efficient, there is almost no difference in the return rate in the long run, no matter which investment you choose. Let's consider taxes here. It turned out that the person who invested in the BB-rated or lower bonds was a Korean. South Korea has a top tax rate of 44% on interest. For the sake of convenience, let's simply exclude the 44% tax rate from the 7% to 8% yield. The effective yield without taxes is approximately 4% to 5%. This Korean investor will lose all of this risk-reward. There is no reason to take on the risk of not paying interest. If tax rates were the same in all countries, tax rates would not be a factor to consider, but they are not, so there is no reason for Korean investors to participate in this market. This investor will eventually receive only a small amount of interest, and as there are many cases where interest is not paid, the investor will record a lower return than other investors from other countries who have invested in United States Treasury bonds. Losses may also occur. That is why I said at the beginning that taxes are not just a factor that reduces the speed of making money, but a factor that eliminates the reason to invest. If you live in a country like Korea, where the tax rate on interest and dividends is excessive, you should never invest in bonds, dividend stocks, covered call ETFs, or real estate for rental purposes. This is a very inefficient choice, and even if you work hard to invest, you will not be able to accumulate wealth to your satisfaction. There are many ways to earn cash flow, not just dividend stocks, covered call ETFs, and real estate investments for rental purposes. For example, in the United States, a country with a high tax rate on income such as wages and dividends, wealthy people like Elon Musk actively use equity-backed loans. For example, let's say you have listed the company you founded at a market capitalization of $800 billion and you own a 10% stake. Then you currently have $80 billion of listed shares. Let's say that you borrowed $100 million from the bank every year using this stock as collateral. Let's assume that the interest rate is 5% per annum. Let's assume that you borrow $100 million from the bank every year and do not repay the interest by adding it to the principal of the loan. Let's assume conservatively that not a single share price rises. If you calculate it, you will not owe more than 10% of the value of the stock you own even if you repeat this loan every year for 75 years. In effect, you will never have to pay it back until you die. This can be treated as equity. This method does not generate income, but rather brings cash into your account through loans, so it cannot be taxed under current law. Wealthy people in the United States generate cash flow in this way. Of course, not just anyone can own $80 billion of publicly traded stock. You will gradually learn how to use this principle to create cash flows with low tax expenses as you study with Finoptio. What we are arguing is that if you live in a country like Korea, which imposes high taxes on regular income, you must find other ways to generate cash flow. The next mistake many people make is failing to spend less. We defined cash flow as the amount of cash inflow that is relatively regular and stable, excluding consumption. Naturally, increasing cash inflows and reducing consumption will increase cash flow. Therefore, the key to increasing cash flow is to curb consumption so that it does not increase indefinitely. However, many people fail to curb their consumption. Only a few people seize the opportunity to become wealthy by securing cash flow and increasing their savings, while many people become impoverished as they age due to their inability to curb their consumption. In South Korea, the percentage of people whose income falls to the poverty level after the age of 65 is as high as 49.6%, and in Australia, it is 35.5%. Even countries like the Netherlands and France, where the elderly poverty rate seems low, are not low because individuals are refraining from spending and increasing their cash flow. It seems low because of the pay-as-you-go pension system, which forcibly takes money from young people and gives it to the elderly population. This method is becoming unsustainable as the number of young people to pay into the system is decreasing due to the low birth rate, and calls for pension reform are growing in many countries. In other words, more people are unable to curb their spending compared to their income than the statistics show. The reason is clear. Many people do not know what the fundamental solution to the problem of overconsumption is. We believe that we can find a fundamental solution in behavioral science and Jewish philosophy. Behavioral science provides important findings that are the basis for a deductive reasoning of fundamental ways to solve the problem of overconsumption. Judaism and the Jews provide empirical examples. Although Jews, who practice the thrift method supported by behavioral science, make up only 0.2% of the total population, they account for 30% of billionaires as reported by various institutions. This means that their thrift method is effective. Let's take a look at these two things and talk about how to moderate consumption. First of all, according to behavioral science, the reason why humans behave in a certain way is due to the need system. For example, a donut is placed in front of you. You pay attention to this donut among the various objects in front of you and look at it in particular detail. And although there may be individual differences, you will try to imagine the situation of eating a donut in your internal model and calculate what will happen next. Some people may dislike donuts because they have an internalized model that eating donuts makes them sick. But let's say this person is hungry and wants to get the feeling of being full after eating a donut. This person's appetite will be strongly stimulated. When your appetite is stimulated, strong motivation arises to eat these donuts. This motivation leads him to eat a donut. And the impressive aspects of eating a donut are experienced and the model is updated. This process is repeated, which is the process of human behavior. Let's think about the issue of consumption from the perspective of the needs system as we understand it. Think about your recent consumption. Did you drink wine with friends at an expensive restaurant? Did you buy an expensive sports car even though you couldn't afford it? Did you buy expensive luxury bags? Did you buy an expensive watch? What is the fundamental cause of all these consumptions? There are two main reasons for this kind of consumption. First, we have a very strong desire for relationships. Although it varies from person to person, humans are social animals and therefore have a very strong desire to form the relationships they want with the people they want. When we look at most of the things we consume, even if they seem to have various purposes, they are often ultimately intended to achieve the desired relationship. The second cause is the model. They spend money because they have a model that they can only form the relationship they want by spending money. Since relationship desire is one of the fundamental human desires, we cannot suppress it. Therefore, what we should focus on is the model. We need to change this model, which says that we can only get the relationship we want by spending. Finding a way to change this model is the key to spending less. Since we all have very different situations, there is no specific method that works for everyone. Let's take a look at a few examples to help you find your own personalized strategy. For example, in the case of men, exercising may reduce consumption. This is because exercising makes them look good and playing sports well naturally makes it easier for them to form the type of relationship they want. Earning a degree from a prestigious school can also be helpful. The world never ignores a Harvard student in an inexpensive outfit. A good degree makes it easier to build good relationships. Correcting one's speech can also help reduce consumption. Some people use negative speech on a regular basis and do not receive respect from those around them. But they are unaware of the reason why they are not respected, so they try to buy respect through expensive consumption. In such cases, even if you just change the way you speak, you will gain people's respect and form a satisfying relationship, which will reduce consumption. As you develop the ability to form the relationships you want without having to consume in accordance with individual circumstances, you will become less interested in consumption. You will naturally reduce your consumption without having to force yourself to do so. And in most cases, the three keywords are the key to forming a good relationship without spending. The first is contribution. People who are willing to contribute to the development of the group they belong to and who actually contribute are respected by others. The second is honor. You can earn honor if you succeed in letting people know that you are contributing to society in a moral and sustainable way. The third is trust. A person who contributes to society and pursues an honorable life based on his or her own firm principles of life, rather than by chance or impulse, can secure trust. If you secure these three things according to your own situation, it will be very advantageous to form the relationship you want. You will be satisfied with your life without having to spend money because you will live a life that is respected by others. In fact, the Jewish people are a group that shares this wisdom. One of the core ideas of Judaism is tikkun olam, which means fixing the world. Judaism emphasizes that everyone has a responsibility to make the world a better place. And they value honor and trust. If you look at the Jewish scriptures, the Torah and its commentary, the Talmud, you can see various phrases that emphasize honor and trust. The Jews who share this wisdom avoid spending money on things with unclear purposes and value contribution, honor, and trust. Mark Zuckerberg, George Soros, and Charlie Munger are all known for living frugally compared to their wealth. Zuckerberg always wears jeans and a t-shirt, George Soros donates a lot of money to political and civic organizations, and Charlie Munger has lived in the same modest house since 1959. They also have private jets and large plots of land, but these are for a clear purpose and not unnecessary luxuries. If you live a life that pursues contribution, honor, and trust in accordance with your situation, you will naturally live a life of contentment without having to consume. This is the best way to save money, which is derived from behavioral science and Judaism. No matter how much cash flows in, securing cash flow is difficult if you cannot restrain your consumption to an appropriate level. Therefore, I strongly recommend that you find your own way to reduce your spending. The third mistake people often make when it comes to cash flow is that they easily give up on securing cash flow. Not only ordinary people, but also people with excellent financial knowledge or who are very wealthy in terms of net worth, often give up on securing cash flow. Experts in a particular field or financial experts often give up cash flow and buy growth stocks. On the other hand, someone who doesn't like the volatility of the financial market holds a large number of real estate properties. Of course, this does not mean that these two methods are necessarily bad. However, these two methods do not generate cash flow. Most people understand that they will not receive cash flows when they invest in growth stocks. Growth stocks are often priced very high relative to the cash flows they generate. For example, Tesla's price-to-earnings ratio, which is calculated by dividing its share price as of March 2025 by its net income for the last 12 months, is 119. The price-to-earning ratio of 119 times means that the annual return on investment in this company is 1 divided by 119, or 0.8% based on net profit. Currently, the average price-to-earnings ratio of the S&P 500 is about 28 times, so Tesla's share price is very high compared to its net profit. Naturally, it is difficult to secure a sufficient amount of cash flow when investing in companies like this. On the other hand, why do we say that real estate investment is difficult to secure cash flow? There are many real estate properties for rental income, so many people may find it difficult to understand. However, their rental yield is also very low to secure sufficient cash flow. One example is the dividend yield of REITs, which shows that the overall real estate rental yield is very low. A REIT is an investment trust that collects investors' money and invests it in real estate to generate profits. The average dividend yield of REITs listed in the United States is currently only 3.79%. 3.79% is a very low dividend yield, considering that the yield on the 10-year U.S. Treasury bond, which can be considered risk-free, is currently 4.2%. For reference, the yield on commercial properties in Seoul, South Korea, is less than 1%. Considering that the base interest rate in Korea is 2.75% as of March 2025, there is a significant implication that the yield of a risk asset, a shopping mall, does not reach 1%. What this means is that real estate is more than just an investment asset. For example, let's assume that the demand for real estate is only for investment purposes. If so, it is impossible to record a rental yield that is significantly lower than the base interest rate, which is absolutely risk-free. This is especially impossible in Korea, where low growth is certain. If the assumption is that rental income will grow rapidly, there is a reason to choose an asset with a low rental yield. However, South Korea is a country where the risk of vacancy is very high. The possibility of lower rental income is increasing, and it is normal that no investors are willing to buy properties with low rental income compared to the price of the property. Real estate prices will fall, and rental yields will rise, making the risk-return ratio similar to that of other investment assets. The absence of this process means that real estate demand is not all about investment demand. Real estate is not only an investment asset but also an essential good. As long as we are alive, we need a place to live. As long as we are in the offline business, we need a place to do business. Real estate is also a luxury good, because where someone lives, where they do business, what kind of building they have, people attribute authority to them, so they buy that building even if it has a very low rental yield. For these reasons, it is difficult to earn sufficient rental income to offset the risks of real estate investment. In general, there is little profit left after paying the interest on the loan used to purchase the property. Real estate is invested for the purpose of capital gains, not rental income. As such, it is very difficult for those who buy growth stocks or real estate to secure sufficient cash flow relative to the amount of investment. However, it is true that this is a way to get the opportunity to see a rapid increase in net worth when a favorable situation comes along in the future. Because of these advantages, many people give up cash flow and invest in growth stocks or real estate. I am not criticizing all of these people's choices. The people we want to advise are those who want to become wealthy but have given up on securing cash flow for their entire lives, only seeking opportunities to increase their net worth. They may have a high net worth at some point, but they will not be able to live a wealthy life for the rest of their lives. There are more of these people than you might think. Why are there so many of these people? I think there are two reasons for this. The first is that securing cash flow is not easy, as we have seen earlier. The usual methods of receiving dividends and interest payments are very inefficient. It is also not easy to reduce consumption. The second reason is that they do not know the importance of securing cash flow. They do not know the importance, and they easily give up securing cash flow because they can get the opportunity to increase their net assets if they give up securing cash flow. We've already covered why cash flow is hard to come by, so let's talk about why it's important. Cash flow is very important in two respects. First, cash flow is important because it is one of the essential components of wealth. We defined wealth as a state of being able to obtain what you want, when you want it, on an ongoing basis. However, without cash flow, people generally cannot spend. They cannot get what they want when they want it. If you have no cash flow and no net assets, you will naturally not be able to spend. However, if you have no cash flow and a lot of net assets, you also tend not to spend much. This is because you can sell your net assets and secure cash, which would allow you to spend enough, but you generally do not make that choice. There are many reasons for this. First of all, there are many cases where there is no liquidity due to the type of net assets held. In the case of real estate, it is not easy to sell real estate and secure cash in real time because the transaction size is large and there are not always market participants. Even if it is a virtual currency or stock, it is psychologically difficult to sell assets and secure cash when the price is volatile and the situation is unfavorable. As consumption occurs every moment, but securing cash is irregular and uncertain, it is difficult to make consumption free. People who have a constant cash inflow, as shown in the red graph, are much more free to spend and live. In addition, when people sell their net assets and spend them, they sometimes feel that they will be left behind. In general, people choose not to spend rather than to spend while reducing their net assets because they strongly feel that they will be left behind if their net assets decrease. For various reasons, people who have no cash flow and only a large net worth emphasize the importance of thrift and live very frugally. This is because they have no choice. There is a way to verify this fact with statistics. It is to look at the consumption patterns of countries with a high proportion of real estate, which is difficult to secure cash flow from. The average proportion of real estate in countries around the world is between 40% and 50%. On the other hand, countries such as China, India, and South Korea, where the free market and financial markets are relatively underdeveloped, have a property asset share of 70% to 80%. These countries have a very low propensity to spend relative to household income, at around 60% to 70%. In developed countries such as the United States, Germany, the United Kingdom, and France, where the proportion of financial assets is high, the propensity to consume is over 90%. If you have a stable cash flow, you can use most of your income for consumption, but people who are anxious because they have no cash flow have no choice but to save their money even if they earn it. Of course, they are saving a lot because they are spending less than they earn, and you may think that this is a good spending habit that is beneficial for becoming wealthy in the long run. However, the statistics on the elderly poverty rate discussed earlier will change your mind. Countries with a high proportion of real estate in household assets, such as Australia and South Korea, are also more likely to live in poverty in their old age. Although it will vary from person to person, it is generally true that people cannot live comfortably even if they earn a lot, and they cannot live in abundance because they do not know how to create a stable cash flow with the money they have left over. As you can see from the statistics, people who have only net assets without cash flow generally cannot spend. Cash flow is one of the essential components of wealth, so you should never give up on securing cash flow. Next, cash flow is important because it is the basis for leverage. We learned in the last video that leverage is essential for the expansion and maintenance of wealth. If you don't agree with this statement, please watch the previous video again. Meanwhile, cash flow is essential to maintain leverage stability. This is easy to see when looking at the typical structures of leverage. Let's say you're running a business. Business is the task of combining capital and labor that have been deployed in inefficient places and deploying them in efficient places. Naturally, there are regular costs involved in the process of combining capital and labor. When raising capital, whether it is equity or debt, there are regular capital costs, and when hiring labor, there are regular wages to be paid. Without cash flow to cover regular capital costs and wages, the leverage structure of a business is impossible to maintain. The same is true of the leverage structure in which loans are used to make investments. If you raise some of the investment funds through loans, you will incur regular principal repayments and interest expenses. If there is no cash flow to cover this principal repayment and interest expense, the leverage structure of using loans to invest cannot be maintained stably. Whether you are doing business or investing by taking out a loan, sufficient cash flow is essential to maintain a stable leverage structure for a long period of time. Once you understand that leverage is essential to wealth, and that in order to win in complex systems, you must maintain a stable and long-term leverage structure, I think you will naturally understand that cash flow is also essential. Therefore, it is a very big mistake to give up securing cash flow. Do you have your own way of securing cash flow? If not, the chances of you becoming wealthy are not very high. Even if you are lucky enough to invest in growth stocks, cryptocurrency, and real estate and end up with a very large net worth, you are likely to live a life far from being wealthy. You will tell people around you that in order to become as rich as I am, you need to live frugally. In reality, you are only living frugally because you have no choice. We have reviewed 3 common mistakes people make when it comes to cash flow, and have increased our understanding of cash flow. We must secure cash flow to become wealthy. And the means of securing cash flow must be a means that is less taxable. And you should know how to rationally curb the scale of consumption so that you can use the cash flow you have secured for other means besides consumption. Finding your own way to curb consumption is something we cannot help with. However, Finoptio has a solution that will help many office workers with tasks 1 and 3. This is the Quant Covered Call Investment Method. This method can result in paying relatively little tax in the process of cashing out profits. And if you invest according to the established procedure, you can invest in just 30 minutes a day without having to think or worry, so it can help you not to give up securing cash flow. Please visit the curriculum page on the Finoptio website. As you learn the study contents of Finoptio one after another, you will naturally be able to develop various financial wisdom, including the Quant Covered Call strategy. If you liked today's video, please subscribe to the Finoptio YouTube channel. Thank you.